Hey, hey, hey. It's another
Hey,
Water Cooler Wednesday.
happy
I was,
Wednesday, everybody. Whoop,
yes. Woo, woo, woo. We can't move around too much.
whoop.
I
Right.
was looking at the countdown and I was kind of like I was like, oh, we're on a game show. That's what we were thinking. So today our game show is how quickly can you get those docs in?
There you go. That's what we want to know.
Right. How quickly can you get those docs in? Because that, I'm Lisa's on the lender's side. There's a side. Lisa's on the lender's side, but she's definitely gonna tell you all the things that we need to know about when we're going for that pre-approval or even after your offer has been accepted.
Yeah.
We definitely have to get those documents in order for us to close in a timely manner. And so me sitting on the realtor side, I just kind of sit there going, twiddling my fingers going,
Unless I need some help, then you jump in and help.
right.
Sometimes that happens.
But I always, we just throw it over the gate to Lisa and be like, okay, let's go. Exactly.
All right.
So,
And for those who don't know, because we might have some people tuning in for the first time today. So this is Dion. Let me see when we go the right way. There you go. Did I do
yeah.
it?
I
Okay.
know, right? Right. My name is Dion Branch, and I am with EXP Realty. And I have a team which is called Allure Dream Homes.
That's so
And
sassy.
yes, and it's a team of ladies that are ready to help you buy a home. So
Yes. And they are ready. I wish you could show the
they're
picture right now. That would be great. I shared it on my page. I was like, oh, look at that. These divas, these working divas. Go on, girls.
yes, yes.
So yeah, and then I'm Lisa, otherwise known as the House Money Mama, where brokers are better. I'm with Nexa Mortgage, and we are ready to handle all your financing needs for your real estate, whether it's for your primary residence investment, or if you're getting in for fix and flip and trying some stuff out, I can help you with that too.
All right, all right, all right, Lisa. Well, today we're supposed to talk about what documents do I need, right?
Oh, we are. You need documents for a loan?
Yeah, that's what I heard. And girl, they told me that it was a lot.
What?
So, you always have that friend that tells you, how the process goes and,
No,
survey
no.
this,
Usually
survey
I say ask
that.
your lender. Usually I say ask your lender, your realtor, because they can give you some good information about it. But your friend might be kind of right.
Right,
There might be a lot of stuff. I got quite a little bit of a list. So
right.
the good thing about it is that the list is there are certain things that just everybody needs, period. Everybody's gonna need them. And then kind of depending on what your individual situation is, there may be some additional things that you need, or you may have something where we need to change around what it is that you need or put it together differently or something like that. So it's probably good we just kind of talk about what the basics are.
Yeah.
Those more specifics as I get to know you and go through your actual loan pre-qualification and find out about your history. That's why I always tell people every loan is different. No
Yeah.
two loans are made alike. It doesn't make
Yeah.
a
No.
difference if you're, the similar backgrounds, credit, income, history, whatever. No two loans are alike. Everyone is individual. What were you going to say? I'm sorry.
But no, I was gonna say yeah, because sometimes I could see people come through the underwriting process or the application process very quickly.
Mm-hmm.
And then sometimes, somebody may need to take a little while, right, and readjust. And so,
Sometimes
right,
forever.
forever. And but then, what I see from those clients is I see that they're more responsive, right? Like
Yeah.
sometimes that'll help you. So that's
Yeah.
that's what I see. But remember, I'm just on the other side twiddling my thumbs while Lisa done doing that. I
Right.
already done
That
search.
is where I do the most of the work. Yes.
Right, right. I've already done search with you, been out, and everything. And so now we're successful.
Oh, but actually, even before we get to that, at the pre-qualification stage, it's still documents I need. So one thing
Okay.
about the house money mama, she tries to be as thorough as possible because I don't want to have you out there raggedy. If
Mhm.
we're gonna have you out there with a pre-qualification, we want to know that that's gonna stand on something when it comes back into an underwriter. So I
Mhm.
do ask for a lot of documentation up front. I've had people get mad. Why are you asking so much stuff? Listen, let me tell you something. I am that person. I'm the one who gets all in your business. That's my job. That's my job. Sorry. And it's a good thing I'm nosy by nature because it helps. But that's what I do. I'm the person who gets in your business. Every loan is different. So not everybody is going to have the same documents, but we can look at some of the more common items that are going to be necessary. For example, anytime you get set up for a loan pre-qualification, I ask everybody for the following: unexpired photo ID, government issued, because I don't want, what came from your job
Yeah.
work. But like a driver's license, a state ID, something like that. That'll work for an unexpired photo ID. Don't bring me something from 1995. I don't want to take your driver's permit and you're 55 years old. That's not going to work. We need
You
something
know,
that actually looks like you today. So that's one of the things that I always ask for. And people like, why? And I usually tell people, believe it or not, there are people out there who will try to get a mortgage in somebody else's name. They will give false information and things like that. Mortgage fraud, people will do that. They get in somebody else's name. There's a lot of different ways they do that with falsifying documents and stuff. So I do ask you for genuine documents. I want to see it. I want to feel it. I want an actual copy of it to go in the loan file. Another thing I'm going to ask you for is going to be, especially if you're W-2 in particular, paycheck stubs, because we need to know what you're actually working with. So what are you making right now? Not what did you make 10 years ago, 5 years ago, 3 years ago. What are you actually making right now? So your paycheck stubs are going to cover about the previous 30 to 45 days. Normally I'm asking for about 3 paycheck stubs. So that way I can kind of look at the history of what you've been earning over the past few months. To go along with that, if you're W-2, I'm also going to be asking for your W-2s from the previous 2 years. Like, for example, that we're in 2022 now. So by now, everybody, since we're in March, everybody should have their 2021 as well as their 2020 W-2s. So I will ask for those right up front. Before I
mhm.
give you the letter for you to start to go out and look for a house, I am going to ask for that because I want to look at that.
Okay. Will
So
you ask for my taxes? My tax?
not unless you're self-employed. So one of the things I wanted to mention was that when I'm asking for your W-2s, you calculating income is not as simplistic as you might think. People say, oh, okay, well, I make X amount of dollars per hour, I work X amount of hours per week, you multiply that out and you get my income. That's not how it works for mortgages. I have to do an average, and I have to do actually 3 averages and take the lower of the 3, and then that's what I use, because we have to be the most conservative when it comes to counting income for your file, because usually the underwriter, they're going to be the most conservative. So
Mhm.
the best way to do it, unless you have a very, very strong argument, the best way to do it is you're the most conservative at the very beginning as well. That way, when the whole point is that I want to push you through underwriting. When we get to underwriting, I want it to be ain't no stopping us now, no turning back. I
Right.
want we pushing for it because we're ready to get this file clear to close. That's my job. That's our goal. So in order to do that, we set everything up correctly up front. So you mentioned about tax returns. So I was going to break that up because I want to make sure I separated that out, but we can discuss it now. So
No.
tax returns would be needed if you are self-employed. If you're a business owner, if you own 25% or more of a business that you work in, then you are considered a part owner, or whatever. So being the owner, being self-employed, I will need tax returns. Tax returns, I'm usually looking for 2 to 3 years. Calculations a tad bit different than with the W-2 person. Kind of something that we talked about this on one of our episodes before, but it's just good as a reminder.
Right.
The more you write off when you're self-employed, the less I'm able to use for income. So remember I talked about calculating that income. I can only calculate income that's actually viable. So if you said, okay, I made $100,000 this year and I wrote off $70,000, well, guess how much income I have to use to qualify you to buy a house with? 30,000, because that's what you left me. So that's something to keep in mind. It's not quite that simplistic, but that's the gist of it. That's pretty much the way it works. That's why a lot of times with self-employed people, they have a difficult time getting approved for a mortgage. And a lot of times they'll turn to something like, they got the money, and if they can put like 20% or 15% down, then they'll go to something like a bank statement product instead, because then that way we can use more incomes, because we just look at the actual what the deposits are coming into the account, the business account, and then we take a portion of that and we use that as a qualifying income instead.
Right.
So you can do that.
And that's why we talked about earlier, the last couple of episodes, we talked about planning. So
yes, that's our big word, 22.
Right. So that's definitely something that you have to do, especially when you're self-employed, as far as making sure that you're filing your taxes and you're planning to buy a house. So unless it's something that you do consistently, but most of the time people write off as much as they can. So know that, right? So we know, you have to say, okay, I'm planning in the next 2 years to buy a house.
Right. And then you got to adjust how you're going to file your taxes, because that's definitely going to make a difference in what you qualify for. Also, for my self-employed people, it would be good. Seems like a lot of people don't do this, but you really should. You should be doing a profit and loss statement at least quarterly. And so, like, my hair designers and people like that, you should be doing those kind of things. You should be doing that at least every 3 months. So that is something I'm going to ask for. I'm going to look for a P&L statement year to date. So like, say, for example, today was July, 15th. Then I'll be looking for your profit and loss statements covering the first 2 quarters of the year. So pretty much through June, I'll be looking for those. So those we expect to have.
It would be better if you have that.
Yep. Well, we need it. We're going to ask for it, because when they get, again, everything is in anticipation of underwriting. And so I'm going to anticipate that the underwriter is going to ask for it. So if the underwriter is going to ask for it, I'm asking for it first. The thing about underwriting is that when your file gets into underwriting, the underwriter cannot unsee anything that you have showed them. We recorded, so I don't know if I should say this, but I can unsee some stuff. You can send me something, I'll be like, I ain't see that. Don't give me that. I don't want that. That's not what we're turning in. This is what we're gonna turn in. This is what I need. That's what I want you to send me. So yeah, we want to make sure that things are set up so that by the time it gets to the underwriter, things are in order the way that they need to be. So we talked about bank statements, photo ID. No, we talked about bank statements. We didn't. We talked about paycheck stubs, W-2s, tax returns, photo ID. We didn't talk about bank statements. So let's talk about that. So we do want to have things that show your assets, because Dion, do people need money to close on a house?
Yes. Did you hear me?
Make that face.
Yes.
Okay.
I'm sorry. Lately, I've had a couple of deals that have not gone through because the people thought they didn't need money.
Or because the people spent the money that they did have. Yeah. And, that doesn't work. So if you're going to buy a house, you need to have the money in your bank account. Don't go out and spend it. Keep it. So, yes, you definitely want to have some funds aside. If nothing else, you need to have funds, to do your earnest money. You need funds to pay for your appraisal, for your home inspection. And more than likely, you're going to need some funds for the closing costs because everything is probably not going to be absorbed by credits and things like that from the closing disclosure. So you're going to need something at closing. So I'm looking for your bank statements to show that you have, more than 67 cents in your account, so that we could, have something to go by. And if you don't, then we're going to have a conversation about that. This is not something I'm saying to belittle anybody or anything like that. It's something I'm saying out of love because I need you all to know what you need to do. And when you work with us, that's our job. We hold you by the hand. We let you know, look, this is what I need. People are concerned about overdrafts. You should be. You should be, because when you get overdrafts, it looks bad to an underwriter. It's assigned to an underwriter of mismanagement of funds. And you got to keep in mind, if we're lending you money, for say maybe what's our average loan amount? Maybe about 200,000 ish.
Yeah.
Somewhere around there.
Mm-hmm.
$200,000 is a good amount of money. so we're loaning you $200,000 and you're only putting down, like maybe if it's FHA, say 3.5%. If it's first time buyer going conventional, then you maybe only putting down 3%. But we're loaning you all of that money. So of course, we're going to be concerned about being able to evaluate you for how well you have historically paid back. So I won't say that I've personally seen a loan. Maybe I have, but that was some years ago. But so let's just say in the last 5 years, I have not personally seen a loan that has been denied because of overdrafts. But just, keep in mind, overdrafts don't look good. They don't look good. So if you can get overdraft protection so that doesn't happen in your account, that's ideal. Some people will take an account, and when they get ready, again, Dion mentioned the word plan. So some people will take an account that they set up and they open just for the purpose of putting money aside. It's like, this is the house fund. This is the house account. This is our dream house account, whatever you want to call it, but that account is just for money to go toward the purchase of your home. And so then none of the other money is, interfering with that. So that's an idea that I've seen people do that as well. And that works out pretty good for some. So it's something you can look at. Here's something else I'm probably going to ask you for 401k. If you're working and you're contributing toward retirement, that's an asset for you. Keep in mind that when I'm looking to evaluate you for a mortgage, I'm looking at CIA. And if you've been following us long enough, then you know what that stands for: credit, income, assets. So the A, assets, 401k could count for that. IRA could count for that. A CD, or if you invest in the stock market and you have, some kind of brokerage account, like with Fidelity or some other place, any of those could help. Who do we have that? We had somebody last year, Dion. Was it Rigel? That, you probably wouldn't know because I don't think I would have shared that information with you. But I know I had somebody, I think last year for the first time, I had somebody that used cryptocurrency. So he pulled it. No, it wasn't him. It was my Indiana deal. So that wasn't with you. So this guy, though, he invested in crypto. So he showed me the account, where he had the investment and stuff, and then he pulled so much of that down and I guess transferred it into real money. However that worked. He did it. And so then, this money appeared in his account and it actually came from his crypto account. So, I mean, whatever you do, wherever, that money is coming from, we do something called source. So we are looking to know where funds have come from. They can't just appear in your account, like out of nowhere, out of thin air. We can't do that. But even crypto and things like that, we can use all that kind of stuff to help you buy your house.
Oh, wow.
So let me think. Go ahead.
No, I was going to say that I heard a lot more about people using crypto too, so to purchase their home.
Yep, I actually have a lender who I want to say maybe October of last year, I think they rolled out a program where they said that they would start accepting that kind of currency as payment for mortgages. So they were offering, I guess if you pay online, they were offering the ability to use your cryptocurrency or whatever the different things are to actually pay for your monthly mortgage. So it's getting up there. It's real. It's not going anywhere. It's not going anywhere. So
yeah. politically, I think there's something this week that happened with crypto. So I don't
Mhm.
know. We'll see what happens. So,
Okay. Sounds good. Okay,
yeah.
Daryl, we are here. You can definitely talk to us.
Right.
So a couple more things, well, really more than a couple. I told y'all it's a lot of stuff. so, this is a kind of a big thing. Letters of explanation. So when you let me just go through the basic ones. So usually my letters of explanation are going to cover things like all access. Like say, for example, if you have a husband and a wife and they have a joint account, but say the husband is on a loan, but the wife is not. So the wife has to do what we call an all access letter. It's just a simple letter of explanation. It could be a sentence long. Dorothy from the Wizard of Oz, grant access to all the funds in this account to my husband, Mr. Scarecrow. You know, you basically just saying that you're legally giving them all the access to the funds, that they can access any of the funds that they need to. So that might be one letter of explanation. Another might be what we just talked about, overdrafts. If you have overdrafts, you may want to, do a letter of explanation for that. Because even though you have them, you don't want it to go where it's not addressed. You got to say something about what happened. Sometimes it's something as simple as, I don't know, my check hit a day late, or, the
Mhm.
date was set up for an automatic withdrawal from my account, something like that. Whatever it is,
Right. Right.
we want to put some kind of an explanation for that. Credit inquiries, addresses over the past 2 years, and any derogatory credit. If you have any derogatory credit, that's something that's worth putting a letter of explanation about, because um, underwriters are still human. I mean, so they will look at what you say about, what kind of life changes that you had happen that had an impact. I mean, hey, we are human. We live. Life happens. Stuff happens sometimes, and so you just have to deal with it. But um, having a letter of explanation for something like that is really, really good. What else we could talk about? Oh, so another letter. So, like for example, a lot of my FHA people, I do a lot of FHA, and so sometimes they get gifts. So you do have to have a gift letter, and then bank statements from the donor.
Right.
Where we always get into a little tussle.
Right. And I think that's the one thing that people just don't understand, right?
Mhm.
So many, I think recently I've had a couple of people, oh, they want to know everything about my mother. My mother
I
just gave,
said I get in your business.
right, my mama only gave me $10,000. And why wouldn't we need to know where she got the money from? Like, was
Right,
it sitting in her account for a period of time?
right.
Did she get it from somebody else? Which then we have to go to that person and find out where that money came from.
Absolutely.
So, I mean, that's all the stuff that Lisa do. I just hear about it. But
Right.
but that's really what's important. And I think the most part we hear so much from from past clients and stuff. I
Yeah,
feel disrespected that they asked me all of this information.
right.
I mean, nobody let you walk off the car lot with the car without asking you some information,
And that
right?
only costs what, 25, 30, maybe $50,000. You're talking about a home for 200 or 300. So yeah.
Right.
Mhm.
So that's I think that's the one thing, like, and then I end up explaining it, and oh, okay, but when she says she's all in your business, she's in your
I mean
business.
it. Right. I mean
Right.
that thing.
She didn't say she was just gonna go around your business. She
Right.
got to go in it, right?
I'm in it.
Right. So,
There you go.
that's what and I'm going to come back to the word, what? Prepare.
Yeah. Yep.
Prepare, right? So,
Yep.
um, make sure, that you have your money in your account, prior to
Yeah.
uh,
Because mattress
applying.
money, we used back in the day, we actually did used to be able to do mattress money. We did. But that's no longer a thing. We can't do that. So I would say around the time that Obama was in office, actually, I noticed that there were a lot of things within the regime that kind of changed. He kept saying
Mhm.
was getting smaller, I kept seeing government is getting bigger because, like how I say, I'm all in your business. That's only because they was all in ours. So now,
Right.
whereas they pass all these different laws, these laws have an impact on me as a financial professional. So I'm required, in order to be in compliance with the government statute for the entity that basically issues and manages my licensure, which is how I make my money. um, I have to adhere to these things. So there's something for money laundering. They have all these restrictions. If anybody works in banking, they can probably understand a little bit better, because banking also has the same thing, the Anti-Money Laundering Act, the Bank Secrecy Act. They have all those things that they have to follow as well. And it impacts us for mortgage lending, because we have to be able to source and show where funds have come from that enter into the legal system of money for this country. So, sorry, but it's what we have to do. So, and if you want the $200,000 for your loan, then really in the grand scheme of things, is it really that big of a deal to give a bank statement, to get $200,000 loan? You know what I mean? Like, kind
Right.
of weigh it out. See, does it really make sense? To withhold something like that. So here's something we actually did not talk about, but I think would be good, because we talked about income, and I know we're getting short on time. I'm nowhere near done with my list, but alimony and child support, I wanted to just mention those items because they can have an impact on your approval, like your pre-approval or your conditional approval when you go through the loan. Child support, we can actually, if it's documented properly, we can use that as income. Alimony, we actually can use as income, but we also can use it as debt if it's something that you have to pay. So any of those things, I would be asking for information about those things. So I just wanted to mention that. And also wanted to just let people know that if you are a recipient of, like, say, for example, SSI, disability, if you're receiving pension. I had a young lady last year, late last year, she's like, oh, well, I'm about to retire. I'm not going to be with a bond. I'm like, wow, you get a pension, right? She's like, yeah. So, well, that's income. We can still use that as income in order to qualify you. So those different kind of things are usable. VA benefits, I got a guy right now. He receives a few $1,000s every month in VA benefits. So we're actually going to be closing on their loan on Friday. So I mean, sometimes you don't know what you don't know. And the best thing to do is ask us, because then we can give you the information that you need, the true, honest, real information, the way it actually works, because we do this every day. So we can give you that information, so that way you know what it is that you need. Something that came up recently that I just wanted to mention before we start to close out. Chapter 13. If you declare bankruptcy, I am going to need, like, say, for example, Chapter 7, I will need your discharge papers, including the creditor matrix. They usually have one or two sheets behind the actual discharge order that shows who all was involved in the Chapter 7 bankruptcy. So I need all of those papers. Sometimes lenders will ask for the entire filing, all schedules, A through J. I have seen that happen as well. But with the Chapter 13, you can buy, even if you are still in an active Chapter 13. I've done it with a number of people. You would basically get permission from the trustee. So they have to sign off and say that, to give you permission to buy a home. Because remember, you're under the protection and the oversight of the bankruptcy court. So you would need trustee permission. Obviously, you need to qualify, but you'd also need to have 12 consecutive on-time payments to the trustee that I can have documented, so I can put in your loan file to show that you qualify. But you don't have to wait. If you're in a Chapter 13 right now, you don't have to wait. I can go down to a 580. I prefer you be higher than that, because you should be, should have been working on paying bills and stuff. So you should be higher than a 580 by now. But I can actually go down to a 580 on a somebody who's in an active Chapter 13. So just thought I would put that out there.
And so I just want to bring up Chapter 7 and Chapter 13. So a Chapter 7, if you're at the end of a Chapter 7, you have to wait 2 years after.
2 years from the date of discharge. So usually Chapter 7, I used to help people do this back in the day. It typically takes about 3 months for it to filter through the system, through the court system here. So, like, say if you filed it in, I don't know, September, then probably by maybe December, it should be discharged. So we're not going by the September date. We're going by the December date, the discharge date.
Okay.
But 2 years from that, and we can do it.
You could do that. And then, but if you filed a Chapter 13, you can actually purchase while in the chapter 13.
That's
And
correct.
then if it ends, after it ends, is there a wait period or
You still
no?
need to show 12 consecutive on-time payments.
Okay. And after it's done in the 13,
You still need to show 12 consecutive on-time payments
on time payments of what?
to the Chapter 13 trustee.
Oh, okay. So, but what if the chapter 13, and maybe this is, I'm not saying it right, maybe
So
if
like
you,
let's just say that you just got out of a Chapter 13 and got discharged in December, and this is March right now. You
yeah,
still need to show 12 consecutive on-time payments that you made to the Chapter 30 while you
uh,
were in it.
oh,
Mhm.
okay. And if you don't have that, then you have to wait.
Right. Because the whole thing is that they want to show some level of reestablishment of responsibility. Um,
Mhm.
and not to say that everybody who, gets into a chapter 13 or a chapter 7 was irresponsible, because that's not always the case. Sometimes I've seen people do medical bankruptcy, bankruptcy because of divorce, all different kinds of reasons.
Right.
Something happened, somebody
Mhm.
died, and all of a sudden everything in their life just plummeted, and they couldn't handle getting things back together financially, so they had to let some things go. It happens, but they want to see that you're now able, because keep in mind, again, we loan you that $200,000, so we want to see that you're going to be able to keep up with your responsibilities. The way we do that is we document historically what have you done as far as how you have made payments.
Yeah.
They want to see that you've reestablished yourself, because if you went into a 13, obviously, you were in dire straits. And if you went into a 13 and you still couldn't pay on time, I don't know that we want to give you a mortgage.
Right. Yeah. So, all
And I think
right,
you
guys. And, and we might have to have a part two because she still didn't finish. Right. So,
there's still a few more things.
so that's the thing about the documents. It's like the most important part of the loan. And so when you're looking for a house, I always say just be prepared. Just be prepared. You know these documents are going to be needed.
Yeah,
Start storing those things. Get your folder together and have everything together. So then when she asks you for it, you be like, I got it already. I
right.
already got it. So
Right.
so you don't have to worry about it, and you can just kind of give it to her, because to me, I think that the timeliness is the best part of it. Because if you're timely with your documents and stuff, then everybody is um you moving along, and you don't have to keep extending the deal, and
Right.
then the seller people start to worry and cancel the deal on you and things like that. So you have a big part, and so you need
Absolutely.
to play that role. And
Yep, absolutely. Couldn't have said it better myself. Thank you.
you're welcome. I want to share something. Let me see
Okay.
if I can share.
Okay.
All right. Oh, wait, that wasn't what I wanted to share. Stop.
I'm like, okay, giving us a listing. All right now.
That wasn't it. That wasn't it. Here it is.
There you are. Those lovely
Right.
ladies. Okay.
So, right. The listing part is what I do. So you all see, I got the listings ready for you.
Yes.
But this month, my team, we started earlier this year in around December, January. The team was formed, and
Mhm.
we're going to have a great launch party, and it's going to be March 24th. And you are a client of mine, you're a water cooler guest that comes on and supports us all the time. You are the reason why we are successful.
Yeah.
So Lisa and I will be there. Come see us, have a drink with us, have a little food and celebrate with us. So we're
Yay.
asking you to join us. You'll see, come to Water Cooler Wednesday. You'll see a post up with information on how to register to be our guest, but we definitely want you to be there, be in the room. We would love to have
Be our guest. Yeah, I guess. I'm sorry. I couldn't resist that. I'm sorry. Lisa don't be doing right. Y'all just need to know that. I don't. I really don't.
Right, right.
I'm probably not good for live TV. We need to pre-record.
Right. Hey, that's what makes it fun. You can have images where you can only see parts of your body, things like that. I'm, reno- I'm renovating, so you can only see parts of my body today.
Yeah, that's okay. It'll be better next week.
Better next week. So, all
Uh-huh.
right, guys. Thank you for joining us. We're
Yeah.
excited. It's another water cooler Wednesday. Thanks.
Woo-hoo. Have a good night, everybody.